Hi, good evening everyone, and welcome to this evening's personal tax revision session. So tonight we're going to be looking at task 6 of the assessment, which is about tax planning. In the first part of the task, we're given a number of statements and we need to say whether each one is true or false. So looking at statement 1, it says Reggie has total income of £105,000. If he pays £5,000 into his personal pension, it will reduce his adjusted net income to £100,000 to preserve his personal allowance. So this one is false, because remember that the personal pension contribution would be grossed up. So he'd only have to pay 80% and then the extra 20% would be made up. So rather than paying £5,000, he'd only need to pay £4,000, so 80% of £5,000. So £4,000 would allow him to preserve his full personal allowance. Statement 2, Paul is provided with a company car for 23-24 and his employer pays for both his private and his business fuel. Paul needs to reimburse his employer for all the fuel provided in order to avoid a taxable benefit on the fuel. So again, this one is also false. And this is because Paul doesn't need to reimburse for all fuel. He'd only need to reimburse for the private element of the fuel. Okay, the next one, an employee receives 50 pence a mile for using his own car for business miles. This payment will be subject to Class 1 primary and secondary national insurance contributions. So this one is true, and that's because it would be classed as cash earnings. And then in the last statement, it says that Joe receives a salary of £75,000, building society interest of £1,000 and dividends of £1,000 in 23-24. He will have no income tax to pay on the interest or dividends. So this statement is false. Now, with the dividends, they're £1,000, so they're going to be covered by the dividends allowance. But we can see that he is a higher rate taxpayer, so therefore he's only going to get a savings allowance of £500. So he is going to have some income tax to pay on the remaining balance of his building society interest. Okay, so moving on to part B. During 23-24, Archie receives a salary of £55,000 and a bonus of £15,000. His employer suggests that rather than taking the whole £15,000 as a cash bonus, they give him £10,000 bonus and pay £5,000 into his pension scheme. So calculate the income tax saving for Archie based on the information given. If he decided to have £5,000 of his bonus paid into his pension scheme directly by his employer. So an employer's pension contribution is a tax-free benefit. So the tax on the bonus the bonus, the £5,000, and we can see he is a higher rate taxpayer, so he would be charged 40% on that £5,000. So that would be £2,000. So if the bonus was paid directly into Archie's pension, he would make a tax saving of the £2,000. Oops. So the next one says Jack and Jill are married. Jill earns a salary of £190,000 per annum and Jack earns nothing. Jill also receives £35,000 in rental income. Neither have any other income. So C, calculate the income tax saving for the couple if Jill transfers the rental property into Jack's name and he receives all the rental income. So we can see that Jill, she is an additional rate payer. So this means that currently she's paying on that property income, she's paying tax at 45%. So £35,000 times 45% is giving us a tax of £15,750. Now Jack earns nothing, so therefore he still has his full personal allowance to use. So for Jack, it would be the £35,000 minus the personal allowance of £12,572. So he would only be taxed on £22,430 of that money. And because he's got no other income, he's a basic rate taxpayer, so it will be taxed at 20%. £22,430 times 20% equals £4,486. So that gives a tax saving for the couple of, if we do £15,750, minus the £4,486, that gives them a saving of £11,264. Thank you very much for attending this evening's personal tax revision session.